Good morning. Good morning. Let's hope it doesn't crash. Good morning. Good morning. Let's say content. Let's monetize this mofo. Daddy needs some new shoes. I was just going over. I need a new chair in my office, and I need a new rug. Both are like 10 years old, so it's not like I'm going out and buying crap willy-nilly. By the way, I thought this morning, Joe, this newsletter, morning, Chris, was super long. And I didn't edit the damn video about how much money I made, so we missed. I didn't get lazy this weekend, but I didn't, overly, oh my God, let me go do this. I did a lot of work. I got a lot of notes today, though. I do have a lot of notes. I woke up, I had nothing, and I looked at 4 a.m. when I woke up, and I was like, there's really not that much out there. And then I was like, damn, I got a lot of stuff. Two price targets, Apple and NVIDIA, that are way up from where they are currently trading. And scans. We've got Netflix, Hoofa, VOO, Walmart, Shopify. Let's see if any brokerage holdings. This one's slow. Okay, hold on. We're going to log out. I probably should restart TrendSpider, but oh well. Or I'm sorry, I should restart my browser. Wonder if I should restart the browser, because it is a little slow. But it could be just because I was on my MacBook. And that damn thing is so fast. So fast. Al Bobbles, Pennant Park. 10% dividend is not sustainable. I mean, I don't even need to look at it, Bobbles. Morning, Brennan. It's not sustainable. It's if you're paying out 10%. I mean, think about it. They're paying, if you're paying out 10%, that probably means that the underlying asset needs to gain somewhere in the neighborhood of, I'd say 40%, with overhead, salaries, commissions, stuff like that. Morning, Andres. There's no way. What is Pennant Park? Hold on. Is it PNNT? Oh, this PFLT. I got a couple income ETFs that I looked at this weekend that looked interesting. Secondary direct debt and loan investments. The fund seeks to invest through floating rate loans in private or thinly traded or small primarily investing in the United States limited. So it's a fund that basically loans money. It's got a $787 million market cap. That's super, super small. Its valuation is an A, growth is a C, and that's what's going to happen. If you go and look at this one over 10 years, it's losing money. I mean, I don't know what it's down 17%. But it's making you 10.44. I mean, let's chart the yield. You got to Alibaba. You got to get. I mean, if you're asking me a question like this, you got to get Seeking Alpha Premium. Use my link tree. Go over here and get the Seeking Alpha Premium. 20% off, free 7-day trial. And what you're going to do for this is you're just going to select the metrics, and we're going to do yield. Dividend yield grade. Nah, I guess. Is it going to give me a history of yield? I guess it doesn't. Dividends. It just gives me the yield grade. So I guess, let's see. Yeah, it just gives me the yield grade. I guess I can't do it. Here's the dividend, and then here's the dividend history. So you can take a look at the dividend history. I mean, it looks like it's 10 cents. So, okay. Good morning, Brandon. We missed you. Morning, Mike. Morning, Scott. But yeah, I mean, Alibaba's. Look at the dividend history. I mean, it seems like it's okay. If you want to make money, I can almost guarantee you. Let's go and look at the total return. We will look at performance and total return because that will include the dividend. And you can see over 1 year, it's underperforming the S&P. Over 3 years, it's underperforming the S&P. Over 5 years, it's underperforming the S&P. Over 10 years, it's underperforming the S&P. So in my mind, there's no freaking way. I mean, do I want to underperform the S&P? If I need income, and I tell this all the time, Alibabas, if I need income, then I'm going to get something like this because it seems to protect my capital okay and pay out 10%. Yeah, Intel's up. I got rid of half the position. Bye. I got rid of half my position, but Intel's, I don't like Intel. The valuation's crazy. It's just nuts. I mean, their forward peg is okay, but I think that's based on estimates that are incredibly just out there. Revenue growth year over year, -2%. Profitability is okay. You have a 41% profit margin. The sector median is 49%. So it's okay. But, would I rather have NVIDIA or Intel? Just get NVIDIA. I mean, I say this all the time. Shop Walmart. Okay, let's continue scans. Momentum is the thing in the market that you want to look at. And Intel does not have momentum. So let me continue on these scans. Covered calls. Shit, Brandon. You probably had it in covered call ETFs. You probably had it in something like Qs or something like that. XLK. But it's a good one to have. I mean, the 10-for-1 stock split that's going to happen. That's happening soon too, I think. I'll look at BITU. Bitcoin's leveraged ETFs. DRN, USD, UDAO. I'll be right back. I have been starting. I had coffee. I had water. I don't even know what BITU is. Is that one of those? Let me finish these scans. Your boy isn't as healthy as he thought he was. I got my blood test back. I got high triglycerides, but that's all from sugar. ETFs, VTI, VYM, VOT, VOO. Low cost spider sectors. Let's see if something pops up here. Oh. We have XLU. We have BRK, Berkshire. We have XLP. What is P? Is that consumer staples? I don't like that one at all. Berkshire. I mean, talk about a sideways trade. Talk about a sideways trade. I'm going to include that one in the... Oh, okay. Hoofa. Yeah. BITU's, I mean, when I bought IBIT, I should buy BITU as well. Okay, spider sectors. We're going to do the watch list. That one is one of the most important because that one will have a bunch, to be honest with you. BLDR continues its way down. Melly gets a nice... I'm not going to include BLDR. We got shop. Has Melly, I mean, lower highs? Have we hit? Are we going back up? I've said it before. I like Amazon over Melly, but that has been the wrong trade for a while. I just feel more secure in Melly. Visa and Dow. Let's look at NASDAQ 100. Oh boy. CEG, Mondelez, Monster, LRCX, PDD, IDXX dash, Netflix, and Illumina. Yeah, Brandon, you're fucking peppy. Purple peppy. S and P. That was a good one. And that picture was pretty funny. Honestly, I'd probably put $10 into something just because of that freaking picture. AMT, UPS, RTX, MasterCard, NEE, Mondelez we already have. Okay, we got the scans done. And I should automate that. Part of the reason I don't automate that is because I want to show people the actual scans, the process of what I do in the morning. So, but TrendSpider's so good that I could automate half this stuff and just wake up to a nice little report that comes out to me about all the scans. It'd be great. I had a consult with a founding member of the newsletter yesterday. By the way, dude is my doppelganger that I had a consult with. He's like, I've bought and held Apple since 2010, and just fantastic conversation. Great conversation yesterday. And if you didn't know, if you sign up for the newsletter as a founding member, you get the opportunity to have a 1-hour meeting with me. So founding members, it sounds expensive, but it's because when it was cheaper, I got a ton of people asking, and my time. So and that was why I upped it a little bit. But this particular person, they were like, dude, I made a ton of money off of this TQQQ. It's about time I just pay it back. But the founding membership is $400, and then it's $150 per hour, like once a month. But honestly, if you want to do more for $150 an hour, I'm probably showing up. But I usually stay. Anybody that knows me, I can't talk for just an hour. I'm staying on for minimum 2. So, yeah. Where are we on the queues? I'm going to start opening up some. We got a lot of scans here. This was a great Ross video. I'll show you that one. Little bit. He talks about how to read candlesticks. It's really a video about when to get in and get out. And his videos are like 30 to 40 minutes, so they're not. I mean, shit. Yeah, I think that's a pretty good. We'll show that one. QQQL or QQQI. We're gonna put this into the covered call ETFs. I probably should change it to income ETFs. QQQI, and then there was another one. Max J. Let's see, is this a video on Instagram or is it? I gotta press pause if it's a video. No. Okay, Max J is, I think that's Max J. I think that's the symbol. Yeah, Max J. We're gonna go and we're gonna do Max J. And if you're on my program in TrendSpider, you get these updated symbols as part of the program here. So we're going to do covered call ETFs. I probably should change the name. But we're going to go back to the queue so that we can run the 4-hour right down there. So that's one. Income ETFs earnings week ahead. Hedge funds pick up the pace, buying commodities. Tesla, I've got a note about it. Palantir, I've got something. Let me see. Is there something in Tesla? I'll be on Spaces, by the way, today at 11, so I gotta probably jump off. Let me see. What is this? There it is. Wells Fargo added Tesla to its 2-3. That might be an interesting one. We'll put that one there. Wells Fargo said Tesla term pullback, demand, price cuts. So today's Wolf thing on Spaces, they've got me talking about macroeconomics. So I told the dude who's kind of coordinating all of the Wolf Spaces that I'm doing, I said, I can talk about how the 10-year, the lowering of the 10-year has really boosted this market. We don't need Fed rate cuts, blah, blah, blah. And so it's probably going to be more macro and large term rather than, and then Wednesday and Thursday. Wednesday is with the Savvy Trader guys again, because they got a huge feedback on that one that people really like that. So that's with Savvy Trader and Shai. I turned out it's not Shay Bular, it's Shai Bular. But so I've got that one, and then Thursday I think it's more on individual stocks, so earnings or something. I told them that they kind of liked my jib. I'm old. I mean, I told the dudes I'm old. Morning, Steph. Morning, Cyber Gangsta. Cyber Gangsta. A recovery program. I don't know. I mean, it is what it is. Let me see. We're gonna bring up Tesla. Oh no, I want to go back, and we're gonna bring up. Let's see. There we go. Okay, and we've got Palantir. I'm gonna move this down to Tesla. There we go. And then we've got Taiwan Semi, ready for takeoff. This was interesting in that AMZU might be a good one because of the seasonal of Amazon having a huge week. Webbush, and it could be the Amazon Prime Day. Webbush, NVIDIA rises, seeking alpha analysts, and we'll start off with the Catalyst Watch, and this one is I'm gonna be on Spaces. That's what it is. Come on, pull that up. There we go. Well, I probably should just show it on Twitter, to be honest with you. Let's go show it on Twitter. Let's go to my profile and I'll show it. My profile. Morning, Daniel. I'll look at that one. That was me last night staring at the outside. Here we go. There. Okay. Ooh. Okay, let's SYM. Let's look at SYM. SYM. Bump, bump, bump. Palantir's going to 30, and then you'll see it pull back. SYM. I don't like the chart in the near term, although I will tell you it looks like it's a nice bounce from the 30s to the 50s, but that was really earnings related. I mean, that was a gap up on earnings. You came back. So I'd probably need to know a little bit more about the fundamentals. We can look at that. Symbiotic. It's a SPAC. Steph, it's a SPAC. Be very, very careful, SYM. Be very, very careful when they say it's AI. It's a SPAC. And that, to me, is kind of a red flag. How do you have a $20 billion? How you can tell a SPAC is this was trading around $10 for a long time, and that's how a SPAC comes to market. Morning, Kevin. Morning. You know what? I'm gonna use that one today when I start the recording. Let me see what they do. Automation technology company engages in developing a more positive revenue outlook and advancements. That's what the bulls say. Let's see. Wall Street says it's a buy. Let's see how many analysts cover it. 15. So it's a fairly decent company, it looks like, but I mean, it's got a decent market cap. It's industrial machinery and supplies. I don't mean to say that, I mean, that's a $56 price target on a $35 stock, 58% upside. And you can see how it ran up. My guess is that this is going to come down pretty damn quickly. I like the volatility if you're going to trade it. The quant says it's a hold because, let's see, the valuation, they're not making money. The growth, year-over-year revenue, 67%. That's fantastic. Profitability, 18% profit margin versus 31% sector, but they can probably grow into that. The momentum sucks. And the revisions, you've got 6 up, 1 down, 10 up, 3 down, so it's not horrible. I'd probably trade this one if you like the setup. I do like over 1 year, you can see if you just do the one year chart. I mean, even in Seeking Alpha, you can see how it bounces off at 32 there and kind of maybe bounces up to 40. So not a bad setup, but I don't know that I'd necessarily hold on to this one. I'd probably trade it on a fairly tight time frame. That would be my take on it, Steph. But it's a SPAC, and I'm always skeptical of SPACs. So, morning, Navin, a.k.a. David. Cyber. Woohoo! Yeah, that NNE, whoever told me about that one, kudos. I forget who did, but SOUN, I owned a large amount but dropped it to buy Chipotle. I think you're fine. I mean, if it were me, I would absolutely be taking some profits. It's just me. I can't check X now, but I will. Chipotle, and I always say this, David, if you're going to buy Chipotle, you better like that rice. And I hate the rice. So I'm not buying Chipotle. I hate the rice. I can't stand the rice. Their growth is going to be still like through the moon. that RSI on this oh God, on the 4 hour on this QQQ is just, it's crazy. But we've seen it before with this RSI, and it hasn't necessarily, resulted in like a 10% pullback, but we're probably going to need to move these up. You know what? Let's take this one out. Remove this horizontal line. That's probably let's see. We're going to put this one in. At 480. Or no, 486. Oh. There you go. That's the new probably support is 486, 490, somewhere in that neighborhood. I mean, we're shooting up, so. Okay, I'm going to hit record because I do have to get off here to go and do those spaces. Okay, I got everything. And yeah, you sent me a message. I'm not going to open up messages on air, and I can't. I'm too dumb to switch off of this view. SMCI is up 2%. Taiwan Semi's up 3%. We got that one. Energy looks to be taking a little bit of a dump. Exxon is down a full percent. Roblox up 1%. That's covering 40. I hate IWM. And I just hate IWM because, what is it, 60, 70% of those companies are non-profitable. So I think you'd take the mid caps or something like that. I forget which symbol it is, but I think that's a better play on that space. That would be my take on it. Okay, hold on. I'm going to look at your... I see the purple peppy picture. That is phenomenal. I got to bring that up. Okay, he started his space. There's 338 people in the space listening. I mean, we got 50 in here. So, okay. I'm going to hit record. If you're new here, hit the thumbs up button. Think about subscribing. When I hit record, it's just to try and do a little more condensed version. I already did scans for the day, so I'll have those. We're going to go over NVIDIA, the Catalyst Watch for the week. 10-year bond, what great, other than NVIDIA, what should you invest in? Webbush for Apple, they just raised their price target. Amazon, seasonally, it's a great one. Taiwan Semi. Palantir will go over. Tesla will go over. What hedge funds are buying. Earnings this week. Income ETFs that I read about this weekend. And some education. One place where I find meme stock stuff. And then we'll go over the social requests and some of the scans based on how much time we've got. So, okay. Let's hit this up. What? We're starting it out with, old 80s stuff. What? Good morning. It is Monday, July 8th. Pre-market's up. I mean, we were down. Pre-market's up. You're in July. It's kind of a yawn period. Markets are okay. I hope everyone had a good weekend. Here in Atlanta, it was hot and muggy. Hot Atlanta. Last night's storm, I was staring at the wall like David Putty, looking at the thing. I did watch a cool movie on Hulu, which has a fight in the International Space Station. But Russia and the U.S. go to nuclear war, and the Russians and the U.S. astronauts have to fight for the international. It was kind of cool. I mean, it wasn't anything great, but it was cool. Speaking of this week, I will be on Spaces with Wolf again. These guys seem to like me. I am double their age. I am 53. These dudes are all in their 20s. But they liked what I did, last week and liked how I talked. So, my voice is a little high and whiny. I don't understand Spaces. They got 300 people in there listening now. I'll join them at 11 o'clock today. I'll join them on Wednesday at 2 p.m. And Thursday. You can look through this list and see my picture, but I think it's Thursday at 3 o'clock is where I'm on. I'm a speaker on there. If you want, just follow me on Twitter. So when I'm in there, it'll kind of alert you if you hit the alert. I try not to spam Twitter. I'm not one of those people that does 40 different, tweets during the day and stuff. So if you follow me, just know whatever I post, it's either entertaining as fuck or it's pretty important, from the market standpoint. So today, just to give you a preview of what I'm talking today, the 10-year bond, it's seeing lower highs. I mean, we can go over here to Seeking Alpha, and we can type in the 10-year. We can type in 10-year. Let's see, 10YR, I think is what it is. No, let's go to market data, and they're gonna have the bond, and we can go to bonds right here, and U.S. Treasury. The 10-year, where is the 10-year bond? There it is, U.S. government bonds. It's just ETF. There it is, U.S. Treasury. U.S. Treasury 10 years. So what you want to do when you're looking at this is say, okay, where's the market going? Because as bond rates go down, the market's going to go up. So let's take a look at the year to date, because we're up. Look at the year to date. We've gone up, even though this 10-year bond has gone up, but we've been going up since May. It was, sell in May and go away. Well, what's been happening? I believe that this bond rate going down is doing the Fed's job, because the bond rate right now is at 4.28 and the U.S. 2-year is at 4.62. Remember, we're talking about inversions for the last couple of years. Well, this inversion has stayed. When the 2-year is higher than the 10-year, the U.S. is paying more for its short-term debt than it is paying for the long-term debt. And that's not always a good thing. It indicates a recession. We haven't gotten to a recession. Right now, the inversion is the largest it's ever been in the history of tracking the U.S. bonds. So again, that's what I'll kind of be talking about. It's more macro stuff, probably nothing that you want to do because most of you are degenerates who just want stock stuff. So let's look at some catalysts this week. There's a bunch of earnings coming out. I'll just change it. Options is elevated in FFIE if you want to trade that one. CONN, FCCN. You can look at some of these over-the-counter stuff. Solar Edge is another one that's probably going to have some big volatility. The big things this week that will come out. We're going to have earnings this week from Pepsi and Delta on Thursday. And then on Friday, you got a bunch of bank earnings. But the biggest portion of what you're going to see the market move is the CPI index comes out at 8:30 on Thursday. That is the consumer price index. That is inflation. And then Friday, you have the PPI, which is the producer price index. That is the cost of goods going into there. The consumer price index is what the consumers pay. If that's up, inflation's going up. If the producer price index is down, that means that these people are just being greedy and taking more. So it's what the Fed watches. It's how the Fed does this stuff. I don't know the whole ins and outs of it. That's the overview of what I have. So it is what it is. I mean, we're looking at catalysts. We're up, and that's all you really need to know. We're up. NVIDIA got a price target upgrade to 150. We'll go over that one. But Seeking Alpha did a good thing. They asked some of their top analysts. They said, what's a good alternative to NVIDIA? So Jonathan Weber, Taiwan Semi, we talked about Taiwan Semi, Michael Del Monte, Oracle and Dell, Udemy, AMD. These are good companies that you want to look at. Here's the thing. We are at, and before you start throwing money at this market, make sure you understand where you are in the charts. And this is how I use TrendSpider. So QQQ, we've talked about it before, how this one was crossing up on the MACD. Back here last week, July 2nd, it crossed up on the MACD. That was setting us up for a move higher. We've seen these ever since April. We've seen these little stairs up with some movement back, but the algorithm has kept you in. If you're in this buy at 426, you are doing extremely well right now. Again, if you threw all your money at this one, You're up 16% in 71 days in a freaking index ETF. That's how good this market has been, how far tech is taking us. When you hear analysts yell, don't get into tech, it's too extended. Well, you got to know where you are. And so the confirmation with the button hook up here that you're seeing, if we start to turn over, where's it going to land? Well, right now you're looking at the last stair where it kind of had some resistance was 486. Old resistance turns into new support. Now that's very short-term resistance. So don't think that you're going long-term. Oh my God, Gary says 490 is the absolute bottom. Absolutely not. Because you could easily pull back to this 450 level, which has a little bit more support than this. We are just looking at short term right here. So understand where you're at before you put money in, because like last week, I put money into IBIT. It wasn't much, but then I read about the Mt. Gox news on Bitcoin and blah, 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 and everything just crashed. And now I'm dealing with, $1,000. I'm just adding to it. It was a small position, so I'm moving in. But before you go out and buy stuff, understand where it is in the chart. So if you wanted to use these charts, if you go and read this Seeking Alpha article and you don't go back to TrendSpider and look at the 4-hour algorithm and look at the support levels that it provides, you're crazy. You're crazy. Now, NVIDIA rises as UBS boosts target as checks confirm demand still exceedingly robust. I've said it before. If you don't have NVIDIA, just buy it. And you had the opportunity to buy it between these two support levels at 115 and 122, but you're seeing you've got confirmation right now. The algorithm hasn't got you in. It probably will get you in today. So if you haven't bought this, just buy it. Right now, NVIDIA has a price target. Let's go over here. We'll look. It is a hold in the quant. And the reason is just the valuation and the revisions. People are taking down their revisions for stuff. But when you look at Wall Street loves this stock, and they're continuing to put out really good news on this. The average price target, 132, that's a 5% upside from where you're trading today. 5%. It's up 1% in pre-market. This is just a stock that will continue to outperform. We talk about SMCI. We talk about Taiwan Semi. We'll talk about Taiwan Semi here in a bit. Everything that's tied to NVIDIA, you can invest in. It's AI, and it's moving. And will this be forever? No. So, take a look at the charts. Understand where you're at. Webbush, another one, seeing more signs of iPhone stabilization, citing recent checks. So what they're saying is, hey, iPhone demand is back. And so you want to invest in Apple. Would I invest in Apple? If you got in at 169, again, you're doing great. I mean, the algorithm got you in here, and you're doing fantastic. Would I add here? Probably not. And the only reason I wouldn't add here is the earnings are coming up, and we don't know what those earnings will give us. But your MACD, it's extended. Your RSI, it's extended. When we go and we look at the weekly, it's even more extended. So understand, the 200 is still your resistance level. Your support level. That's the ultimate support. I don't think you're going back under 200. If you do, load up, because it will go back over 200. Now, 220, I talked about 220 being the resistance level. We bounced up there a couple of times. Right now, 220 has become the support level for this short term. So when you see it pull back under 220, if you're between 200 and 220, just buy Apple. Am I buying it personally? No. I've got tens of thousands of shares of Apple, and I'm not looking to add to that position. But when they pay a dividend, I buy, it's at least like $2,000-$3,000 worth of dividends that I get, somewhere in that neighborhood. I think it might be up to $5,000. I don't know. I don't keep an eye on that one. This is just one that I buy and hold. And buying and holding has proven to be the right strategy. Even when Apple has those big pullbacks, it's the right strategy. Now, you might be saying to yourself, hey, Gary, that 4-hour algorithm is great. How do you get it? Well, you get it by going over to my Linktree, linktr.ee/dailystockpick. And the link is, if you're watching the video, it's right down below in big letters. And you click this top link. TrendSpider, and it will take you to this page, okay? It will take you to the front page, and you can check out the pricing. $53 a month. $53 a month. If you want a little bit more robust, it's $98 a month. But you can get the 4-hour algorithm, the 65-minute algorithm, all the scans and watch lists, everything that I use to manage my portfolio, to protect myself from the downside. Everything that I use is here. So you go and sign up. Then after you sign up, you go back to Linktree, and then you go into the upper right. You take a screenshot of your actual payment window on the account in TrendSpider and just email me. And I will send you a link to everything that you need to import into your system. It's a leg up. So that's why you sign up through me and not through somebody else, is I give you that start with all of the algorithm, all the strategies, all the watch lists, everything that you need to do, I give you. And so that's how you get TrendSpider. And again, we went over the Qs, we went over Apple, we'll go over NVIDIA, we'll go over everything, everything more. Whatever you need, I've got. Now, here's how TrendSpider helps you as well. Amazon. The upcoming week is Amazon's most dominant period of the year, boasting a high win rate and average return. Here we go. Let's go and we'll look at Amazon. I've said Amazon. I think it's a $250 stock at some point in time. It is bumping right up against 200. But boy, don't you wish you added at that 181. I mean, that is a fantastic entry price. Right now, 188, which was the multi-year resistance level. Because, again, if you go back and you look at the weekly, this had 1 bump up against it, 2 bumps up against it, 3 bumps up, and it couldn't get above it. It's finally above it. Old resistance becomes new support. And now if you just go into seasonality on this one, and we're going to go week of year, and I'm not going to take it back just to this year. We're going to go back quite a while. Let's go back to 2008. Let's look. 17 years. This is the best week of the year right now. You're in the 28th week, and it is an 81% win rate with an average mean change of 3.36%. Now, next week, it's 50%, so it's a coin flip with a mean change of 1.5. Next week is your Amazon Prime. And then the following week, fantastic. It's the top week. It's a little bit less with a mean change of only 2.2. But if you buy it this week, likely, again, past performance can't predict future performance, but it's likely you're going to do just fine. Now, you're heading into some weak months here. And I'll tell you, my overview of the market is, I'm going to do a little bit more this week into this. But I do think that we're heading into July and August, and you're going to see an August pullback just like we have the past couple of years. And then you're going to see some weakness in September and October. And then you're setting yourself up for just a face, as Tom Lee puts it, a face-ripping rally into the end of the year. So, but again, this is how TrendSpider helps you. Now, talk about Taiwan Semi. Takeoff reasons why it's still not the top, but caution is warranted. This is an analyst recommendation on Taiwan Semi. I don't think they give a price target. I read the article. I don't remember a price target, but they might have said it. Taiwan Semi is up 4% today. Taiwan Semi is up 4% today. And we talked about this being a resistance level. It is now support 158. But it is up. Don't you wish you got in at that 164 price? My algorithm, the 4-hour algorithm, back tested for 24 months, 26 positions. You make 134% in this stock. If you're bought and held, you make 118. Again, you want to protect yourself from the downside. The algorithm tries to help you. Am I getting in at this price? No. The MACD just crossed up. Might not be a bad time, but I think the top, again, I'd rather buy this at 170 than 190. That's just my entry price on this one would be 170 instead of 190. That's it. I mean, again, you want to take a look at these things in order to find out. Taiwan Semi, though, it is the expansion. It is the expansion of a capacity, and that's what they're doing. The capacity expansion to meet the AI chip. Remember, if NVIDIA is going to grow and they're going to sell a bunch of these things at like 90%, Taiwan Semi has to make those. And so Taiwan Semi has pricing power over NVIDIA. They have pricing over Apple when they're making their chips. They have pricing over AMD when they're making their chips. Right now, Taiwan Semi is the fab of the world. And that's who's making these chips. So Taiwan Semi, you want to be invested in it. Palantir. This is an interesting one. If you want to know what Palantir does, just go to my Twitter and look at this, or, sign up for the newsletter. It's going to be easier than finding it on my Twitter. Sign up for the newsletter. Newsletter is free during the week. There's 5 rules for traders in the charts for next week. That's a paid one over the weekend. It gives you a leg up on the week, and it's a fantastic, fantastic newsletter. See, I give you all the charts that I'm looking at. And I tell you, hey, this is why I'm looking at this stock. This is why I'm looking at this stock. This is why I'm looking at this stock. And it's a super, super long weekend thing this weekend. And Damon commented, thank you. It's a great newsletter, blah, blah, blah. Everybody who is part of the paid one, nobody's really complained. And nobody unsubscribed, so I assume they like it. But Palantir is a stock. If you want to know what Palantir does, take a look at that. We can look at the stock. Palantir, we talked about this one being a $25 stock. And yes, $25 was a multi-year resistance level. It turned into support. We're seeing it now as it's moving up. It'll hit 30. At some point in time, Palantir hits 30. And it's got confirmation. Don't you wish you were in here at 21 when the algorithm said to get in? Again, TrendSpider and the 4-hour algorithm. It could be yours. It's going nuts. It's got some positive stuff about it. They're holding some AI boot camps, and it's just another stock that's gotten into the realm of retail, and they're taking it up. So if you want to know what they do, it's a fantastic, fantastic thread just to read. It'll take you 5 minutes. Notable things from last week, and this is what's interesting. I saw a photo on social media of a refreshed Model Y, and if you didn't know, the Model Ys that are out now, they're still the original ones. Yes, they add little bits and pieces to it, but the refreshed Model 3 that just came out, a huge step up in engineering. Huge. We've been waiting for the Model Y to come out. It's being test driven now because they have certain kind of tell factors with covers over them when they're being parked and things of that sort. It's out there now because we've got some stuff. The Model 3 refresh didn't push a huge upgrade cycle, but the Model Y, being the top-selling vehicle in America, could. And again, anything that's in the news is priced into the market, so don't think you're getting a head up on here. But what I wanted to point out is last week, Wells Fargo added Tesla to its Q3 tactical ideas list, and that said the stock might see a near-term decline. He maintained his underweight rating on the EV firm and pointed towards expectation for a declining delivery growth driven by lower demand and diminished returns on price cuts. Now, Tesla, no joke, it hit that 250, went up to 255, pulled right back under 250. We talked about that being a major, major resistance level. And so at 250, I would expect it to pull back. Am I selling? No. You're only at 248. When we get down to 245 or 240, am I selling? Yes. I'm probably making a significant trim in the stock at that point. Now, I don't own this one. It's in my parents' portfolio. I'm managing my parents' portfolio. The way I own Tesla and the way I just continue to own it is through my the XLY, which is an ETF. 40% of XLY is Amazon and Tesla. I like the ETF. But you can see here, this one has just gotten a meteoric rise. Now, if you like to trade Tesla, or if you like to own Tesla, and you're like, God, that 40% down from the first of the year, I don't want to go through that again. My 4-hour algorithm, okay? It got you out before there, okay? Did you want to add here? No. And you've got to learn how to look at these things and say, yes, it's bullish, or no, it's not. Would I have added at 183? Probably not. I probably would have added here at about 185, 190 and said, if I didn't own so much XLY, that's the way I would do it. My algorithm back tested for 2 years, you make 199%, 22 positions, so not even once per month. If you bought and held, you're up 7% 2 years from today. So again, the algorithm protects you on things like that. Wells Fargo said Tesla might see a near-term turnback, so we just went over that. But again, that was an interesting one. Am I looking at Tesla now to buy it? No, I'm not looking to buy it. Once it holds that 250 and we get a little bit more, the earnings are coming out, and that's the big point. Remember, they had a ton of price cuts. and they don't have, we know that China had an enormous year or quarter because they had their record deliveries. But what's the pricing been? Because BYD has been taking prices down. So has Tesla cut prices too much? Are their margins bad? You can go in here and look at Tesla here on Seeking Alpha. And again, if you want to look at this stuff, it's Seeking Alpha Premium. I mean, take a look at this. It's a hold in everything. By every nook and cranny, it's a hold. And the valuation is where it really hurts. And that's where it is. And when you go to profitability, yes, it's an A+. Because their current gross margin is 17%. As that comes down, this stock gets killed. And so that's the key on this one. Now, where are hedge funds putting their money? They're buying commodity-sensitive stocks. This one puts it right into play. And it's got a bunch of material and energy ETFs that you can buy. And that's where the picks are. This is from Goldman Sachs trading desk. So it's not like some douche on the internet is just telling you that's why Seeking Alpha is so good. Again, I'm going over Seeking Alpha. If you want Seeking Alpha, 20% off your membership and a free 7-day trial. Go to the link tree. It's the second link right there. 20% off, free 7-day trial. Again, you can get news like this. And it's not coming from a douche on the internet. It's actually vetted, editorialized news. And it's very, very trader specific without commercials, ads. You don't get pop-ups. It's super, super nice. Now, earnings this week. We got Pepsi, we got Delta, we got JP Morgan, we got Citigroup. I mean, if you want to look at these things, you can go in here and look. Let's look at Pepsi. I don't like Pepsi. I mean, just perfectly honest with you, I love the drink, hate the stock. Now, it is a buy in the quant, and they like it. I just don't like it. And the valuation is the reason. Are they growing enough? No. I mean, their PEG ratio going forward is super high. And then you look at their growth. And year over year, they're growing their revenue by 4%. Sector mediums, 2%. But I just, there's better places in the market to put your money. And what do they come out with earnings? I don't know. We can go and take a look at the stock. And Pepsi is part of the core portfolio. And you know why it's part of the core portfolio? It's because I drink freaking Pepsi. I got asked about Chipotle. I don't like the rice. I'm not investing in Chipotle. Is it a mistake? Yeah, I've missed out on the huge run. But here, Pepsi, am I investing in this one? I don't like the way the stock chart looks. We talked about 160 being the support level for this. And how did we get that? Well, you go and you look down here. Look at several times. I mean, this is multi-years. And it's not perfect. You're seeing it break through there in June of 2022, and then it used it as support in October 2022 with the lows. And then here in October 2023, it broke down below there, but it used it again in March of this year as support, and it's probably going to use it again. It may break through there. I don't trust the earnings right now. So that's why I don't like it. I go into more detail in my newsletter on Pepsi. We can talk about Delta. I go into Delta. Detail in there, DAL, and why this one might be a good trade. Where do you want to look at to buying it? What's it might pop to? This one might be a good trade. Is it a good investment? I hate airlines. I go into why. We got Wells Fargo this week. Wells Fargo is one. Maybe, I go over into detail in the newsletter. I like Wells Fargo. I own Wells Fargo. I went through the plan of what my Wells Fargo stuff, what I'm going to do with it. So it's up 0.69. I mean, financials are doing fine. And that's $60. That's a key level. So, but I go into it there. Citigroup. I go into Citigroup. And I go into JP Morgan. I think I skipped JP Morgan because I don't like JP Morgan because of the whole Jamie Dimon with Epstein, the Epstein stuff where they funded Epstein Island and blah blah blah. But again, Citigroup. Algorithm got you in here at $60. Algorithm over 2 years on this one makes you 40%. Buying and holding makes you 35%. It's a great option to have. But earnings this week, you got some big ones. And if you want to look at that article. Now, I'm going to talk about some of these income ETFs. And if you don't know income ETFs, I've got a full list. And they're called covered call ETFs. And so the full list, again, it's a watch list. When you sign up for TrendSpider, you get this. These are called covered call ETFs. And I update these lists So when you're subscribed as part of my program in TrendSpider, you get the updates to these lists. But there were a couple that I noticed. One was on Instagram, and this is BlackRock has launched a buffer exchange traded fund, and the symbol is MaxJ. And what we'll go over here and look at MaxJ, because Seeking Alpha will provide you a very good look at MaxJ. It's not covered by the quant. It's an ETF. And it's brand freaking new, so it doesn't even have a yield yet because they haven't paid anything. The asset manager said the ETF will track the returns of the benchmark S&P 500 using options with an upside cap while providing 100% hedge to the downside for roughly a year. So if you want to look at it, you can look at it in Seeking Alpha here. You can see their holdings. I don't think it has a lot of stuff here. It's brand new, so you can Google MaxJ. I include the Instagram link right here, which has a little bit of information. It's supposed to protect you from, hey, we're at all-time highs, but it's not proven. So I include it in the list here on covered calls, but it's not proven. Now, another one that I saw is QQQI. Opportunistic way to access double-digit yield without losing upside potential. This is very similar. And again, I updated this one in TrendSpider so you have access to scan through it. But here in Seeking Alpha, you can see I'll include that article. Again, it's an optimistic way. The yield on this one, 5.72%. And again, it's new. It just came out in January. But you can see over a year to date, the actual asset is up. Looks like it came in at, it IPO'd at 49. And so you're at 52 right now. So while providing you a 5% yield, which is paid out 2% over, I guess, this year. Let's see. Let's look at their dividend. And we'll look at dividend history and the payouts. It pays out. Looks like it pays out monthly. So yeah. It's a good one. Again, you're getting 62 cents. It's a nice yield. It's supposed to provide you a opportunistic way, double-digit yield growth without losing upside potential. That's the way it is. So I like those too. There were a couple of things. Somebody asked me, hey, where do you find retail stocks and what trading? I mean, Google, Google a couple. I'll include a couple of links. There's an investing.com link that I have with the pre-market that I've included before. Swaggy stocks too. I mean, this is one. What are people talking about right now? This measures social sentiment. Don't pay for anything. I don't think that you need to pay for anything, but this is all free stuff that you can get. I mean, the internet is just a treasure trove of information. You can use AI. You can use all that stuff. So Swaggy Stocks is one. I'll include the links in the newsletter. Now, this is Ross Cameron from Warrior Trading. Do you have trouble determining when to get in and out of stocks? In this episode, Ross breaks down the criteria he looks for. It's using candlesticks. So understand, Ross is a momentum trader. He is a momentum trader. Doesn't look at fundamentals. He trades just on the charts. So it is an interesting video, 25 minutes long, so it's not super long, but I think you'll enjoy it. I like to include some educational stuff in the newsletter, and it's a reason for you to sign up for the newsletter. The newsletter is free during the week. All of these newsletters, the recent posts, they're free. You can go back and look at last week. You can go back and look at the scans. You can look at everything. It's all included as part of just your subscription. Just, put in your email address. It's as easy as that. Hector, these are social requests. If you're listening on Spotify, you can go down below, ask me about a stock if you want me to look at it. If you're on YouTube, you can just comment down below. Even if you're reading on the newsletter, just respond to the email or put a comment in Substack. Any way that you can get in contact with me, I follow up with everybody and I look at these stocks. Hector, ORC, Orchid Island Capital. This sounds like a REIT. I'm not a fan of REITs, Hector. Let's look at this one, Orchid Island Capital. I mean, in an AI market, do you want a stock that's going sideways? When the Qs are up 16%, do you want a stock chart like this? I mean, if the answer is yes, have at it. But that stock chart to me looks ugly. So ORC, what do they do? Declares 12-cent dividend. It's a 17% yield. I mean, let's chart it. We'll go over here to charting, and they're paying a 17. The reason they're paying a 17%, they're not putting in their the capital back into the business. We can, and I want to look at total return here, and we'll just look at it against the S&P. I mean, total return over 1 year, Orchid Capital, you're losing 1.36%. Over 1 year, the S&P's up 25%. Why would you want to do that? Year to date, Orchid Capital's up 7%. That's including the dividend. And the S&P's up 16%. Why would you want to do that? 3 years? Again, Hector, if you need income, that's where these types of things come into play. So you put your capital in there, but understand the 17% of a reducing cap, say it's trading at $8 today, okay? 17% of $8 is different than 17% of $7. You may lose up to 10% of that stock in capital dollars because they're paying it out. I don't like it. Do what you want. But again, if you're in a situation where you need capital, you need income, that's a whole different story. And that's a way, I'm not in that situation. So it's kind of hard for me to comment, but I wouldn't do it. This is Joshua Engel asked me about SPMO. This is a momentum ETF against the S&P 500. The S&P 500 has been in a bull market. And so if you want, something that's going to be a bull market, this is the momentum ETF, SPMO. Let's go over here. We'll go to SPMO and we'll go to the summary. SPMO is a solid mix of high volume and volatility. You can see from the quant, it's a strong buy. The only thing they have a problem with is the dividends, probably because the yield sucks. Dividend yield, it's 0.71. They don't like the dividend, but it's a momentum ETF. We can look at the holdings, and you can see what this does is take the S&P 500, and it basically loads in, okay, what's hot? And it weights that one. And I don't know when it re-weights, but it's number 1 out of 82 in U.S. equity, large growth. This is the number 1 ETF. So if you're interested in that one and you're interested in growth, this isn't a bad one. And we can go over and we can look at the chart. SPMO, when you look at charting, all this does, let me refresh. Why is this doing it? SPMO, let's see. Ooh, my computer's slow. We're going to go select symbols. We're going to SPMO. Seeing Alpha doesn't like a lot of websites, doesn't like Safari much. So SPMO, you can see 3 years. It greatly out, again, as the S&P. Let's select select symbols. I'm not going to do the S&P 500. We're going to go XLG, and we're going to go QQQ. We'll include the S&P 500. You know what? No, I'm not going to include it. We'll do XLG and QQQ. Now, SPMO over 3 years blows those away. Year to date blows it away. So I think it's because there's so much NVIDIA in here, and NVIDIA, again, this is a good one, SPMO. I don't know if it's actually actively managed, but that's a great stock. You know what? I'm going to include this in my ETF list because this is a good one. Let's see. Where is the ETF list? Energy names, spider sectors, low-cost ETFs. Because I do think, let's see about the cost. Let's see, expenses. That's what I want to see. Yeah, it's pretty low cost. It's an A. Again, great pick. Orchid Island versus SPMO. SPMO all day. John Pelham, looking into AVGO pre-split. Now, this is Broadcom. John Pelham wants to know about Broadcom. I bought Broadcom a couple of times in March, and I think into April I started adding to it because it was showing strong momentum. And again, if you want to play that, you just take a look at, and Nancy Pelosi bought this last week, disclosed his buy of NVIDIA and Broadcom. Wall Street says it's a strong buy. The quant says hold. And the quant says hold because of valuation, growth, and revisions. First, let's look at Wall Street. Where's the Wall Street price target? It's 1887, your 10% upside. Is that likely? Well, let's see. The 52-week high is 1851. So it's not unheard of that this stock will get back up there. It is a 10-for-1. I think it's a 10-for-1 split. We can go over here AVGO. And we can look at AVGO. You got that gap. Kind of looked to fill it. Didn't fill it completely. Algorithm got you in today, or I'm sorry, Thursday at 17.55. You're at 17.18 today. So the algorithm pulled you down a little bit, but it's starting to climb back up. You do have momentum here. The stock split happens on July 15th. The MACD reset. It's going back up. The RSI is kind of in no man's land. It came back down. It's at 65. It's still extended. Now, here's the volume. The volume's trending down. Do I think this is a good buy before this? I don't think you buy this because of the split. I think you buy this based on AI, and this is an AI winner. Is it extended? Yes. The valuation is absolutely crazy. The PE is 39. The PEG ratio is even high. Even their forward PEG at 2.10, that's high. When you look at their year-over-year growth, 21% in revenue. That's really good. When you look at the revisions, though, there's 26 that bring it up, but 5 that bring it down. 29 that brought it up, 1 that brought it down. So I would be a little bit cautious of adding this so close to the high. But if we are going to continue, I would say for a long-term buy, this is one that you buy. I did not buy this for a short-term buy. AVGO, when the algorithm was telling me to get in here at 1,300 and it dipped down to 1,200, I didn't worry about it. I added more because I thought, hey, the 200 days providing pretty good support. Let me add more. And then we got those great earnings and we got the 10-for-1 stock split announcement and we had a little pullback. Do I think I bought here? This is where I bought right here at March 7th because this initial buy, I didn't trust it. And then the algorithm got me out. Did I get out? No, I added more. And so that's what you have to do. When you take a look at this weekly, we're looking at a start chart that's going bottom left, upper right. Do I think this is a good one to add for this split? No. Do I think this is a good one to add for long term? Yes. Then that's why I did it. So let's look at some scans. Netflix. These are some of the ones in the core portfolio that had a cross up. Netflix has a cross up. This is a $700 stock. It's at 682. At some point in time, it's going to 700. Don't you wish you had the algorithm because you would have bought it at 549. You would have added to it like I did at 549. I added to it. VOO is in the core portfolio. If you don't know, this is my preferred ETF for the S&P 500, not SPY. If you're trading options, trade SPY. But if you're just adding the S&P 500 to your portfolio, VOO is the way to do it. Yes, they're about the same and they perform about the same, but VOO is a little bit cheaper. Walmart. Anything under 70 on Walmart, just add to it. The advertising tier that they have, they're buying Vizio, so they're going to own a TV platform. They're continued the grocery leader in America. They are just doing things right. They're taking market share away. Walmart and Costco are the two that you want to add. And why isn't there a buy-in here from the algorithm? Well, because the algorithm got you in at 63. All this is saying, when I say, hey, it's a scan and you don't see the entry in TrendSpider, the reason you don't see the entry is because this is a continued bullish move up. Look at the MACD. It reset itself. It reset itself down to the oscillator. Now, the RSI is a little high. Would I be adding here? Short term, no. But long term, 5 years from now, absolutely I'd be adding to this. Shopify. I go over this all the time. This is an $80 stock. And how do I think it's an $80 stock? Well, we can take a look. 50 days moving positive right now. 58 was the initial buy in this one. This one gets another move higher. The MACD is just crossing up a little bit more. The RSI a little bit extended. The 200-day negative. I'd love that 200-day to move positive, but in the short term, we've got it. Their earnings are coming up. I think they sandbagged the last time. I think you'll hear it go very well here July 31st. Now, if you look at the weekly, why is that $80 up there? It's because that's where the 200-day is. And that's where we've hit, twice, almost twice. This one, 65. I mean, this seems to be a little bit of a resistance level right now. If we put that level right there at 65, and it was this one right here, it got up to 71. So this 71 seems to be a resistance right there. That's where you have some resistance. So I would argue that is probably the resistance now. If you can buy this anywhere in between here, I think you're doing okay. But again, the ultimate resistance, I think it's an $80 stock. So we have Melly, we have ARM, we have Dow, we have Visa, we have Dash, we have MasterCard, we have Southern Company, we have UPS. All of these things are in the newsletter, and you can see all the scans up. One that I want to bring up, this has got a scan here in our spider sectors and our low-cost ETFs, but Berkshire, and I include this as a spider sector because it's its own. And the reason I want to bring this up is back here in February, I said, hey, this is a trading range. And I said, you can add to this stock whenever it's in this trading range. I think you can add to it as the algorithm gives you an entry. Well, look at this. This is the interesting part. If we want to, can I move this forward? I guess not. It's staying there. But this is the interesting part, is that's the range that we've been in. Now, when you have a range like this and the MACD is just kind of coiling and the RSI is sitting there and you have ups and downs, what do you want to do? Well, in a company like Berkshire, which is traditionally bottom left to upper right long term, you want to add to it. Because what does that do? It usually means that we're getting ready for a move higher. The Bollinger Bands are cinching up. They're contracting. The MACD is on the down right here. Now, do you want to add to it right now from a weekly standpoint? I think you're okay adding to it. Is it the best possible entry? Probably not. Because again, go back to kind of where I think we're going. I think in July, we're going to continue to see some strength, but this is a sideways move that Berkshire has been having for months. Do I think it breaks out? I don't think so. I think we see some continued weakness into July and August. Now, I would argue that next year, and I have to take a look at the charts on these things, but I would argue that the last 2 years, in September and October, we've seen extreme weakness only to sell into November and December. And then a huge amount of buying just happens as it dips. I think that's what you're seeing on Berkshire. I think that's what you're seeing on a bunch of this. So I don't want you to wait to add to this stuff. I want you to start setting up your portfolio for a win. As we start to see a pullback, and if you start to see a pullback and you have names that are at all-time highs, that's when you want to take a look at your portfolio and say, you know what, there's other opportunities that I can get into, or I can pull out, sit in cash for another opportunity. You don't want to wait too long. And again, I talk about this all the time. The psychology of trimming is just to trim a little bit, sell one share. Like for instance, Apple. Apple here at all-time highs at 224. It's down 1%. So its all-time highs were probably Friday. Let's see, it high 227. Do I want to sell a couple of shares? Yes. You don't want to sell a ton, but you want to get into the habit of selling, because a great example is NVIDIA. I sold NVIDIA at 500. Okay, this is pre-split. Sold NVIDIA at 500, and I said, you know what? I'm going to get back in. I think it dipped down to 450. I never got back in. Into that original buy. I never did. I always was like, yeah, it's going to dip under 500 again. I never did. The psychology is really, really hard when you get out to try and get back in. So take a look at this stuff. Again, the newsletter is free. Sign up for any of these. One that I want to bring up is Alpha Picks. So say you're listening to me. If you made it to this far, I don't know why you would want this, but Alpha Picks is 2 data-driven stocks, one on the 1st, one on the 15th. And it's really, it provides you stocks that I would never even look at. But the reason I'm an affiliate with it is because of the performance. You can see 122% against the S&P at 35%. So I use it as ideas. There's a couple of different ways you can use it. I use it as ideas to try and, there's been several that I've purchased that I'm actually up on, several that I'm sitting, an example, GCT is one of the ones that they recently purchased. I'm probably not supposed to talk about it, but GCT, I've talked about it on here plenty of times. So I bought, it's at 32. I bought at 40. So I'm adding, we talked about sideways. Look at that sideways. 25 is your ultimate support. I think we're putting support in at 30 and it's bouncing up to 32. You're under the 200-day. Your 50-day is just starting to move higher. So if you bought at 29, kudos. I don't think I added at 29. I may have added a couple, but this is a long-term stock. Alpha Picks picked it right here on April 15th, and they picked it when it was at 31. I added a bunch. I also added at 40. So I'm down on the 40, up on the 31. So again, that's how I use it. So it's simple that any of these things that I'm an affiliate of, the top 3 are really your links. Webull is just a fantastic trading platform if you don't have a broker or you want to use it on your phone. I always suggest Webull as a phone because I hate the Fidelity app. So I like Webull. Okay. I will talk to you tomorrow. See you. Bye. Okay. Let me look at some of your comments. It's so humid. In fact, I'm sweating in here. I don't know why. Where's my temperature? I always keep my thermostat at 70. Yeah, it's 79 in here right now. So that's why. It'll kick on. I just turned it down 78. This room doesn't have a ceiling fan either. I need a ceiling fan probably in here. My electric bill, by the way, at most is $160. And I'm finding out that's pretty cheap in the summer. Yeah, Palantir's just one. What do you think of BLBD underperforming? BLBD? What's BLBD? Oh, Bluebird. Full disclosure, Varun, I don't know if you're part of it, but it's an alpha pick. And they picked it, I think, on the first of, maybe it was the 15th pick. I didn't add to this one because I didn't believe in it. Their analysis was spot on. I think they're right. But I think that run up to me kind of signaled, hey, I want to look this at 34, not at 40 something. And I'm forgetting why I looked at that one with kind of a $1.5 billion. Wall Street says it's a strong buy at 51, but there were only 7 analysts that covered it. And that was kind of it's ranked number 1 in construction and machinery. I think in my mind, when I went over this one in my head, I said, do I want industrials? And my answer was no. And the reason I didn't want industrials, and it had less to do with Bluebird, I'm willing to lose out on a stock like that in something that I don't know. So let's do XLI versus BLBD. So the orange is and let's look at year to date. Let's just look at year to date. So look at the industrials and look at how much Bluebird is overperforming the other industrials. That's just year to date. You go over 1 year and it's outperforming. You go over 3 years and it's outperforming. I want it to be closer to the XLI. And so Varun, I remember going over this in my mind, and I think I even said it on the podcast. I'm not allowed to talk about their current pick when they do it, and they shun me on that. But I looked at it in my mind. I said on my thing, it's a stock that I would never even think about buying. And I looked at it and I said, valuation wise, and then their actual summary of it, it made total sense to buy into this one. BLBD. It made total, their analysis, again, their biggest thing is that they provide that analysis. So it made sense to me. But when I looked at that against industrials, I was like, it's overperforming. Can it go higher? And the valuation with a PE of 16 and the sector at 18 and the forward gap at 0.54, I said, it might. And then you look at the growth and it's grown by 26%. This may be an opportunity to buy it, and I don't know. It just looks, from a valuation perspective, it looks cheap. But, from a 4-hour algorithm standpoint, and that was the other thing I think, it didn't look like, it looked like we may be setting up for a move higher. But you know what? I'm not supposed to do this, but let's see. Let's see. Blue Links is a sell. Top airline pick. I don't see the actual pick. They give you a ton of. I don't see it. Let me see. Yeah, I don't see it. I'm not going to go into the full thing. They'll yell at me. But Varun, I don't like it. I think you have an opportunity to buy it at a lower price. And I would say if you're looking to add to this one, I would say that 200-day at 41. Right now, if you're going to put in, a good enough, I mean, the volume shelf is up there. If you look at this, let's just move this back. Let's move this back to the beginning of the year. And when you're looking at it, the volume shelf is up there. I mean, you're sitting right at a volume shelf right there, but the volume shelf up there means it'll go back up there. So buying here at 46, I think you'll get back up to that 52 because the actual, the actual stock, that MACD is super, super low. It is an oversold stock. It's an industrial. I think it's just, it went too far too fast, and I think people started taking profits. You still got a bunch of people holding down here in the 30s. So, and they're not selling. I mean, there's some that have sold, but they're those green bars, as far as the buys go, you're seeing it right here that people are starting to buy, and then you're seeing it here. And if we just move, we'll move this. Let's move this. We'll move this to the last time the algorithm got you in because it was a nice 55% move. The algorithm makes you 527% over 2 years on this one. It's been a huge stock. But you can see if we just move this down here, is anybody still holding down here? The answer is no. So your real support level looks like it's at about 45, I would say. But so hopefully that's enough information for it. I just didn't like it, and it's outside of my sector that I want to kind of be in. I love your live stream, and I've been watching it for a while now. I love showing us, and I learn a lot. Thanks. I just have a question about TrendSpider. I watched your video, how to set up TrendSpider to make you a better trader with David. Yeah, David's awesome. I have a question about the 8-day strategy that's shown with Tesla stock, which had made more than 353% after a year now. From that video, do you still recommend that strategy? So let's just go look at it. Here's the 65-minute. We set that one up. David set that one up on live with us. And it's the 65-minute algorithm, which still is there. Let's see. So Tesla. Tesla over 8 months. With that strategy, you make 29%. Buying and holding, you make 14.8%. Over 8 months, it gets you 92 positions. So yeah. I mean, do I still recommend it? Absolutely. I think the 4-hour is even better. I mean, the 4-hour is mine. David's is pretty good. And that just what it shows you is that TrendSpider has these powerful tools that you can set up, and again, you can backtest these strategies. Past performance doesn't predict future performance, but it absolutely does help you kind of get some stuff. Andy, Intel is just, I mean, I'd rather buy it at 40 than 32. It still sucks. So Intel's up, 5% today? Yeah. 33? I don't know. Did they have some kind of news or something? Let's see. Somebody raised their price target or something. There's nothing on this other than probably somebody made a big buy. So, yeah. Intel, I got out of half my position. Ooh, did Cloudflare drop? I think we're seeing a lot of... Qualcomm's up 1%. PanW's down 2%. I'm down because Apple's down 1%, so that's going to be a huge drop for me. There's no way my portfolio's up. Yeah, I'm down 0.61 while the NASDAQ is even. That's all Apple. Cloudflare. Oh, Chris. I mean, it got the gap. It got the 200-day. It should have been known that that one was going to pull back a little bit. You're welcome, Eric. Chris, I think when I built this house, I think it was like a $1,500 upgrade, which sounded crazy to me. But they'd put in 9 inches, or I think it was 11 inches. It might have, I forget the inches, but it was extra blow-in insulation up top in the attic. And that has made my house like incredibly energy efficient. So, holy crap, Chris, that would make me kind of sell my house. That's a good one. Yeah, if you had a trailing stop, buy back in. I mean, Cloudflare, I don't know if I'd buy back in, to be honest. Is this one kind of stretched? You probably know more about it than I do. It's a strong buy. Buy from Wall Street, $89 price target. Has it gotten over 89? Yeah, it went to 116. So Wall Street has 30. I mean, it's got enough analysts that's probably not a bad price target, but yeah, I think it's. Let's look at Dell. Dell's. I mean, listen. Once Michael Dell stops selling $10 billion worth of Dell stock, Dell's going to take off. You're at 144. It's up 3%. Add it between 132 and 143. I mean, trading's not that tough. Okay, I got to run because I got to do an 11 o'clock spaces. And I got to set up for that. Because I'm not going to do it on this computer like I did last time because this computer just is too slow for spaces. I got to do it on my laptop. And it's all audio anyway. If you guys have any questions, hit me up. All the socials are here on Linktree, so you can, I'm fully available.